So Reserve Bank of India, you know how a central bank was set up and what is the purpose of the central bank in various countries. We saw in the initial day when we were talking about money and how money is being traded and so on, right? So in that way, when we have this particular RBI was first formed as a private bank. Remember that. RBI was a private bank initially. And later, it was nationalized in 1949 with the full ownership transferred to Government of India. At that time, it acted as a central bank, okay, for the entire Indian subcontinent. Till then, it was just a private bank operating in India, Nepal, Bangladesh. So, okay. That's the reason why it was initially put up in Calcutta. And because it was largely handling with Calcutta with financial systems. And later in 1937, in 1935 it was in Calcutta. In 1937 it moved to Mumbai, that is former Bombay, in Bombay Presidency. Until now it is present in Bombay only. Okay, and this particular what do you call the RBI? When it was nationalized in 1949, this was the first bank to be nationalized in 1949. And later it was 1955, we had SBI. The Imperial Bank of India was nationalized as SBI. So they were given certain function. The basic function is the regulator and supervisor of the financial system, where they prescribe some broad parameters, how the country's banking should be, and basically the confidence in the banking system and so on. The original idea of issuing currencies and so on. So everything came into existence in this particular case, right? Fine. So now we go into the details of RBI functioning, okay, how it goes. As far as functioning of RBI is concerned, RBI has different functions. You can classify the functions into general functions, right, and the monetary functions. Okay, so two types of functions, you can just classify them. Where all they go with the monetary, that is money part, you can just put it as under monetary. Whereas general, that is development role, promotion role, supervising role, all these are general functions. Okay, but I have made it as a list without any categorization. Okay. So the primary job of RBI is monetary authority. What is monetary? Money. Okay. So anything related to money, we call it as monetary. In monetary authority, they were the one who provide monetary policy. But now we have a committee, okay, monetary policy committee. But anyway, RBI has a major role there because the RBI governor is the ex officio chairperson of the Monetary Policy Committee, which we will see in detail later. So this particular monetary policy is the one which is provided by RBI, and this forms the very basis for the existence of RBI. Okay, RBI exists for this, for the basic purpose. Tomorrow, banking can be also transferred to someone else, but RBI has this monetary policy, which is a fundamental aspect, the funda of the very existence of RBI. And in this particular monetary policy, they try to focus two things. One is price stability. Okay. In the idea of price stability, they try to have inflation targeting. Okay. We call it as inflation targeting. What is inflation targeting? Say we have inflation between 0 to 3% or 4%. Okay. So this is the range of inflation. Okay, plus 2%, minus 2% you can have. Okay, that is 4% is a target. Minus 4%, minus 2% of the 4%. That is 2% to 6% is the band under which the inflation could be retained, beyond which the RBI has to act. If the inflation falls below 2%, the the inflation falls above 6%, the RBI should strengthen its policy. But the RBI, the feasible or the acceptable rate of inflation is 4%. Okay, price rise. We will see about inflation in detail later. But this is the basic idea. This we call it as inflation targeting. Okay, this inflation targeting is based on price stability. How the price is being stable in India throughout Indian economy. So that is what we try to govern in this particular aspect. What do you call it as inflation targeting or price stability as such. Then the second important thing with respect to price stability or inflation targeting, what they try to locate is that we try to have growth rate. Okay, so your growth rate has to be also taken care of, because your policy should not affect the growth. So price stability, that is inflation versus growth rate. So that balance has to be maintained by RBI. That is a primary function as a monetary authority. Okay. Then the second important function is manager of forex, foreign exchange reserves. Okay. So as a comic, Forex is for babies, right? For how Forex is for baby, Forex is for country. Okay. So babies live on Forex, that is your cereals, food. Whereas Forex, it's the breath of a country, right? So this particular, as a manager of foreign exchange, they are the custodian of foreign exchange, the guardian of foreign exchange. They need to develop and maintain the foreign exchange reserves. Not only that, as a matter of principle, that is, they maintain the foreign policy, they represent a certain international financial institutions like IMF. India is represented by the governor of RBI. Okay, so many financial institutions, the governor of RBI is the representative of India. So because they are also manager of the foreign exchange, kind of. Okay, so custodian and guardian of foreign exchange is going to be the RBI. Okay, then comes the currency. This we have seen already. Issuer of currency. RBI is the sole authority to issue currency and to check the counterfeiting of currency. And in this, the most important aspect is that they circulate the minted coins by the government of India, and they also involve in currency circulation kind of. So maintenance of the entire currency comes with RBI. This is a function which is coming under issuer of currency. Okay. Then as a banker, RBI acts as bank to two parties. One is it's a banker to the government of India and the states, and it is a banker to the bank. All commercial banks and other banks will bank with RBI. Okay, we will see it at large. What is banker to bank, and what do you call the banker to government? And for banker to bank, in this scenario, they are called as lender of last resort. Okay, lender of last resort. If anybody doesn't give credit to the bank will come at last to RBI. The RBI will assist the bank in giving some credits, right? And all banking activities of government of India, if the government wants to interact with the market, the government wants to interact with the international forum, everywhere it is only through RBI. And because RBI is a banker to government of India, RBI also involves in managing the debt of government of India. Though we wanted to create a separate debt management office, still RBI has a role in this particular banker to bank in this particular aspect. Okay. Then, as far as controller of credit, the controller of credit in the sense, it's a larger function. What do you call the RBI does? It is a corollary of monetary authority. So since it is a monetary authority, it controls credit system. That is the reason why we call it as monetary and credit policy. Okay, RBI provides monetary and credit policy. Monetary policy, credit policy. Okay. Though monetary policy is partially done by MPC, the credit policy is completely done by RBI, the controller of credit. What is that? Liquidity in the market. How much currency should be in circulation? How the interest rate should be. So all aspects with respect to currency system, it will be the controller of credit system. What we have, the lender of last resort. And then we have acting as a clearinghouse. What is clearinghouse? We have some payment and settlement system. Say you have different types of payment, right? You have UPI payment, you have Aadhaar enabled payment, you have private payment banks, you have other payment wallets. Okay, so there are many methods. When I send money from my wallet to your account, how the payment is made? So what are the other issues? The exchange of instruments, how it happens, everything, settlement of payment, how it happens. Everything is managed by RBI. For that, RBI has a separate organization called National Payment Corporation of India. That is a apex organization which talks about all payment issues in India, and that is controlled by a wholly owned institution by RBI. So RBI acts as a clearinghouse for all payments and settlements in India, which is going to happen across India. This is done through digital mode, and we need to ensure safety and security of these. We need to have some regulations, supervisions. You need to have some directions, facilitations. Everything will be done by RBI. Okay. For that, it has a separate house itself. So for payment and settlements, you have apart from this, you have banking, right? In banking, payment and settlements are there. For example, you have IMPS. Okay, you have apart from IMPS, you have RTGS, NEFT, EFTs. So all these methods, they try to, settle the payments. So all these come under NPCI, they try to make all these aspects in this particular way. Then issuer of license. So under issuer of license, what they do? They try to provide licenses for those who want to create new banking services. Say whether it is going to be starting off a commercial bank with 500 crore, or a small finance bank with 100 crore, or a payment bank with 100 crore, or an NBFC which is going to be created. All these will be done with the license, and this license will be given by the RBI. Okay. Say for example, when Post Office, Department of Post started this one, that is India Post Payment Bank, IPPB. That license was also issued by the RBI. Okay, so because they come in the banking sector. Remember, Post Office Savings Bank Okay, so Post Office Savings Bank doesn't come under RBI because that's a sovereign bank. Post Office Savings Bank is run by Department of Post. Okay, Ministry of Post. It's a sovereign function, so it doesn't come under RBI. The regulation is done directly by Ministry of Finance. The thing is that as far as post office is concerned, they follow the guidelines of RBI, but RBI doesn't control the post office. Okay, the interest payments, all other issues, it will be controlled by Ministry of Finance. Remember that. Okay, we'll check out it. We will deal that when we talk about monetary aggregates, M0, M1, M2. So when we talk about that, we'll discuss that. But initially, you remember that that bank doesn't come under this. But when post office payment bank was introduced, payment banks come under NPCI. So the government of India, that is Department of Post, has to come out with a license from RBI. Okay. At that time, there was even a controversy. RBI was not issuing a license to IPPB for various clearances. So how it can be? It's a foolish thing, because post office is a sovereign function, and when they ask a license, you are obliged to give the license, right? But there were some issues going on between RBI and the Department of Post at that time. But anyway, later they came after 2 years. So this is how it happens. So issuer of license, anybody who wants to do banking, they need to get the license from RBI, right? So that's the idea. Then comes the developmental role. As far as developmental role, what you see, it may be development in the sense, any type of development in the banking sector. You have something kind of creating a new institution, promotional activities, providing guidelines, anything. It comes under this particular aspect. Yeah. So any doubt in this? Any doubt in these functions of RBI? It is just an overview of functions. Anyway, we have to largely see about different aspects like this controller of credit. We have to talk about largely in banker. So we'll be talking banker to the bank. When we talk about debt, we'll be talking about this one. Okay, all these things we'll see at large. But anyway, so it's a general overview what we have. Okay. Now, an overview on credit control. You say that RBI is a controller of credit, but RBI, how it controls credit? It controls credit two ways. One is quantitative, by volume. Okay, volume of the liquidity. Another one is qualitative. Okay, qualitative means it doesn't go with the volume. They don't go with the volume, but some intangible way, like moral suasion, direction, guideline, likewise. Okay. In quantitative, you have some conventional methods and non-conventional measures that we'll see later. Okay, conventional measures, you have some methods like bank rate, open market operations, variable methods, and so on. Non-conventional methods is open market, market stabilization scheme, and kind of market, marginal standing facilities. Okay, liquid adjustment facilities, and so on. That is different. Okay, so in conventional, you'll be talking about bank rates, you'll be talking about open market operations, you'll be talking about variable operation rates like repo rates, reverse repo rate, so on. Okay, whereas non-conventional, we'll be talking about marginal standing facility, what do you call that? Market stabilization funds, kind of. So that we'll talk in a later way. I don't want to dump facts today. So this is how the credit control is made. So this is the main important function of RBI, and second is monetary policy. Okay. So when we start with banking, we will do some terminologies in banking. Okay. So what all the banking terminologies we have, we need to do. Before that, we'll finish RBI and then go to that, because RBI is a functionally apex organization, so we need to do it. So second aspect, how an organization can be called as an apex organization. Okay, we call some apex, say apex bank, apex institution, apex finance institution, likewise. In finance, if you want to find whether the organization is apex or not, the first criteria is that whether they are regulator, whether they supervise. So regulation and supervision is the first fundamental thing. If they are regulating, supervising that sector, then they are apex. The second thing is refinancing. Refinancing means bank will provide money to you. Someone will provide money to the bank. That is RBI. Okay. Then RBI is a refinancer to that particular bank. Then it is an apex bank. SEBI, it is a regulator, supervisor. Naturally, it is an apex bank. NABARD. Okay. NABARD is an apex bank. How? For microfinance institutions, NABARD is a apex bank because they regulate microfinance institutions. supervise microfinance institution, refinance microfinance institution. So NABARD is an apex bank in microfinance institution. That's all. In microfinance sector, NABARD is a apex bank. Okay. NHB, National Housing Bank, is a apex bank in housing sector. Understood? So that is how you can understand what an apex organization is. Apex organization is an organization which has two important functions. One is regulation, another one is refinance. Understood? So if you find that two functions are coinciding, then we call it as an apex organization in that particular sector. Clear? Any doubt on this? Any questions you have today? You can ask me. So we complete the session today in this particular aspect. Coming Wednesday, we will start with the other aspects. We will talk largely about RBI. We will completely talk about RBI and what do you call functions of RBI, and then we go